Money FM 89.3. Best of breakfast. Companies to watch.
Welcome to Companies to Watch.
Welcome.
Yes, Dan Cohen and Akhtar. Good morning, sir.
Good morning. Happy Wednesday.
Yeah.
It's hump day indeed.
It is.
And looking forward to the weekend that's coming right up. But first, let's look to markets and find out what is the company that we're watching today. And Emaad, what is big?
I know.
What is red and has a lot of money?
Ang pao lah.
Ang pao? Yeah, I wish that were the case. But
Yeah.
all I get is gold coins. You know, the chocolate coins.
Okay.
But yeah, yes, returning over to Singapore's biggest bank. That is...
Has to be UOB or OCBC, right? No, it's DBS.
Very good. You read my notes. Well done, Emaad. Yes, today we're looking into DBS and we're going to find out whether it's going to be
a hot or not.
8855-0893. Text us and tell us, what do you think? Well, the reason why we're turning to the red is because Singapore's biggest bank just hit fresh records and stormed to an all-time high, pushing the market value past $150 billion.
Wow, dude.
Yeah, so that's widening its lead over the two other local heavyweights. And that kind of price action begs the question, is it still a buy or have you missed the train? Well, let's find out more. So just yesterday, we've got shares of DBS soaring more than 3%, driving its market capitalization beyond $150 billion.
Wow.
The counter hit about $54.80 at market close, continuing a rally that's seen it climb more than 25% year to date. Yeah, fantastic run if you're seeing, now. And if you compare to the other two banks, it does seem like DBS has a relatively better edge or competitive edge, because in June, DBS became the first listed company in Singapore to cross the $100 billion mark, or 129 billion Singapore dollars. That's the market capitalization milestone that it hit earlier this year. Of course, helped by a weaker US dollar. Yeah, so it is now nearly double the market capitalization of the nearest banking rival.
Yep.
That's OCBC. So it really does show how much of an edge it has and how much of a hold it has within the financial institutions here in Singapore.
Or perhaps it's the good luck that's been brought in by their new chief executive, Tan Su Shan.
Yes.
Who, by the way, has been crowned number one on a list of the most powerful women in Asia by Fortune.
Wow, number one?
Yes.
Fantastic. I thought you were going to say that you know her personally.
No, I wish.
Okay. Well, DBS's latest prints gave bulls more fuel. After all, back in August, in their earnings report, the bank did beat expectations and they raised the ordinary dividend by 11%. And of course, reintroduced the capital return dividend on top of a $3 billion buyback already in place. It also kept its 2025 guidance, even as profit moderates over time. So the bank fared relatively better than peers of OCBC and UOB, both of which did cut their expectations for the full year, citing broader potential impact of US tariffs on Southeast Asia. So shares did pop to news of the records on the day itself when they reported their earnings back in August. A return on equity is still punchy at about 16.7%, with net interest margin at about 2% last quarter. So yes, like what you've mentioned, Emaad, CEO Tan Su Shan just took over from Piyush Gupta and signaled that deal activity and client engagement are re-accelerating into the second half. So based on what you're seeing and what you're hearing, what do you make of her leadership so far?
I think it's been fantastic, to be honest. They've doubled down on other revenue streams, so they have a pretty diversified business strategy. They're investing in digital banking platforms, and they've also doubled down on wealth management. So I think the fees coming in from wealth management have also allowed them to offset the disappointing results from net interest income because rates are declining right now.
Exactly.
Yeah.
But yeah, it does also show that, returns still is able to moderate over time, despite, net interest margin slipping. But it does also show that it's outsized wealth engines, even with its multi-family office platform, they have scaled to about $1 billion in assets under management in just 2 years, targeting $2 billion by, guess what, end of next year.
Really?
Yeah.
What would you do with $2 billion, Dan?
What would I do with $2 billion? Well, first things first, buy an island, and build a resort there and just live out for the rest of my life, I guess.
I would say build.
What would you do?
I would say for you, build a factory with 100 or so Ducati bikes.
Oh, I love
housed
that.
inside.
And perhaps build my own track as well.
I would like to at least give away some of it to charity, I would hope.
Oh, of course, yes. But I digress. Okay. So capital return cadence as well also did help with a lot of confidence. I mean, all three have returned cash this year. DBS did lay at a quarterly capital return dividend plus cash buybacks that was also significantly bigger than what we're seeing in UOB and OCBC. So, as you can tell, DBS is monetizing scale across lending, wealth and payments and feeding shareholders reliably, which explains the premium.
Yeah, I also want to touch on what you said about assets under management. A big contributor of that is the fact that clients across a number of different ages, not just elderly people, are prioritizing legacy planning.
Yep.
So we're seeing a lot more proportion of younger people getting engaged earlier on in the journey of investments and financial planning, which gives them a wider pool of clients to work with.
I mean, there's also a lot of concern when it comes to the next generation of wealth, right?
Yep,
the
that's
wealth
right.
transfer. So I think with that, DBS might likely capitalize on this increasing trend and hopefully, continue to increase in their profit margins from there. So some of the factors that analysts believe might have been driving the stock price would be, of course, investors, they are being paid dividends for that. That's as we're seeing capital return and a line of sight that 2025 net interest income stays slightly above 2024. Quality spread over peers also gives it an edge. And of course, management handover without the drama. Now, we know that normally when you get a new high-level C-suite executive, there oftentimes comes a bit of a doubt, right? And a lot of the drama because change in leadership, change in operations. But it does seem like, Tan Su Shan's leadership role has been accepted relatively well for what we've seen. Yeah,
and especially in an environment where we're seeing geopolitical turmoil, falling interest rates, technological change. She's done a really good job.
Yeah, fantastic. In fact, the income engine has been consistently running, thereby allowing capital to keep coming back. So let's talk about the bull case and bear case, Emaad. Well, for me, the bull case has to be the premium returns that look durable today. Of course, the shareholder flywheel as well, given how they are giving back to dividends and investors. And of course, the skill advantages from, banking to wealth. It does seem like DBS keeps adding high quality deposits and fee flows at a scale that rivals can't simply duplicate. But on the case of the bear, I mean, we've got, valuation premium being a slightly turn-off reason for many investors today. After all, DBS now trades around 2.1 or 2.2 its price-to-book ratio, well above UOB's about 1.15 and OCBC's 1.2. So perfection is priced, but any stumble could bite quite hard. Net interest margin is still gliding. I mean, as global rates starts to normalize, it does seem like, that could soften and likely carry more weight on their profit margins. Operational risk overhangs as well. I mean, we've seen how the outages of their services have affected, their stock price. And if we look at how MES implements some form of a pause on their non-essential tech changes, that also might affect the way they, I guess, stay competitive within this landscape. But it's still contained at this point. So then again, some might say that it doesn't carry much weight.
Yeah, and big banks like DBS usually have like a capital buffer to deal with outages and other tech-related mishaps. So.
That's right. Yeah, but all in all, I guess, DBS, it does earn its premium. It has earned its premium, record share price, market cap lead, and capital returns on repeat, all for a reason, and for a right reason, of course. So if you want the Singapore bank with the cleanest momentum story today, it does seem like DBS is still the one to beat, but just know that you're paying for quality, and it comes with a price. So some believe that it's sustainable as long as it continues to keep its ROE and returns machine humming while easing the op risk shadow. So it does also seem like investors are relatively optimistic because among the three listed banks in Singapore, did you know that DBS enjoys the most buy ratings from stock analysts, Emaad?
I am not surprised.
Yeah, the stock has also the highest estimated dividend yield among its peers at just shy of 6%. JP Morgan Chase in September raised its recommendation on DBS to overweight from neutral, saying that dividend outlook can lead to a long-term re-rating. And, since the start of the third quarter, analysts have revised earnings estimates for DBS by about 2%.
I think the verdict is a formality, Dan.
Yes, I know, right? So hit it. hit the red button. Because it's going to be a hot. Woo! What say you?
I say the same. Strong fundamentals, stellar balance sheet, resilient in the face of headwinds, and bold leadership.
That's right.
Hot.
And it's staying hot on TipRank's Yahoo and Barron's because as of the 8th of October, they're all giving it a buy rating. Okay, Emaad, fun facts. Okay, do you know what the 4 inward-pointing red arrows in DBS logo mean?
I don't know. Do they correspond to the values of Singapore?
No. It's modeled after the Kaizen piles used to support the DBS building, deep foundation. The idea was symbolic that wealth won't slip through.
Okay.
But on that note, did you know that in Hong Kong during renovation, DBS Hong Kong mistakenly had 83 customer safety deposit boxes, some full of valuables, removed or crushed?
Oh, no.
Talk about wealth not slipping through, right?
Oh, gosh.
So they recovered 36 boxes, but many contents were badly damaged.
Their wealth literally slipped through the crack.
Oh, good. So what do my partner and banker have in common?
They give me stable returns.
None of them give me credit.
Oh, okay.
Okay. What do you get when you cross a banker with a fish?
Tell me.
A loan shark.
Oh, yeah, I saw that one. What did the tree do when its bank closed?
A tree do when its bank closed?
Yeah.
It becomes a tree bank.
It started its own branch.
And
one more. What did the nut say when it robbed the bank?
I don't know. Almond.
Give me all the cash you have.
Okay, that's good. And that's all we have for DBS.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.3